TV18. Ritu, please go ahead.
Mr. Khara, first, you've given us your guidance on credit, growth. But what about asset quality? We've seen that improvement quarter on quarter for the last few quarters. Now your net NPAs also are at less than 1%. What could you tell us now that we're closing the financial year in this quarter? What would the asset quality look like? That's the first question. Where the slippages also came from. I know they've come down to about 3,000 odd crores in this quarter. And secondly, since you're the largest lender to Adani Group, while we've read your statements that, the exposure is within the large exposure framework limits, could you tell us more about what the absolute quantum is, if there's any sort of concern there, if you've increased provisions or will look to increase provisions because of what's been happening, with the stocks in the last few days?
Two questions which you have asked. I will answer the first question in terms of how the asset book look like. I expect our effort and endeavor would be to keep the credit cost as low as possible. And the kind of trend which you have seen for the past 2 quarters, our endeavor would be to keep the credit costs around the same levels. But also, I think I'm a bit bullish in terms of how the economy looks like. So that is one of the reasons why perhaps in the near term, in this quarter, perhaps we should be in a position to see that kind of a credit cost. And the quality of assets, I don't envisage any challenge in the quality of assets. Your second question in terms of exposure to Adani, we have lent to Adani for projects which are in fact having tangible assets and which are having adequate cash generation, and they have been in a position to meet their obligations. And as far as the quantum is concerned, that is actually just about 0.8, 0.9% of our total loan book. So from that point of view, we don't envisage any kind of a challenge in terms of their ability to service the loan obligations which they have taken. So, and also we have not extended any loan against shares, etc. There is no such portfolio which we have. So the impact of the stock market prices of the stocks will not really impact any of the margin calls, etc., and any of the loans which they have raised from us. As I mentioned, that it is all against assets which are cash generating and which are having excellent track record in terms of the repayment in the past.
So if you could actually elaborate, 0.9% of SBI's loan book is the total quantum of your exposure to Adani. If you could give us the absolute figures in terms of what is the fund-based and non-fund-based exposure in total to Adani.
It is everything put together.
So if you could give us the breakup.
I think non-fund-based exposure, I would only like to mention that they are essentially letter of credit and the bank guarantees, and these bank guarantees are the performance bank guarantees. And this is not against any of the equity raising or any such activity. We actually breakup wise, maybe Swami, would you like to add something? If at all you have, or maybe you can.
Breakup debt from us, and including a small investment of about 285 crores. So in all, the exposure total is about 0.88% as on 31st December. And as you clarified, sir, there is nothing which is against acquisition or against shares in this. Ritu, if you require any other granular data point that we can share offline with you.
In fact, we have not issued any guarantee towards securing any of the financial obligations or acquisitions either. So as I mentioned, that these are all performance guarantees or the financial guarantees, but done and which are required in the normal course of business. And there is nothing which we have done which can cause a concern for us.
Thank you.